everyone, and welcome to another deep dive with me. Today, we're going to be slowing things down a little bit. We're going to be diving into the world of bonds. Now, I know what you might be thinking. Bonds. Really? That sounds kind of, well, a little boring. But stick with me. Today, we're on a mission to uncover why bonds have this reputation of stability, strategy, and just overall peace of mind. Our guide for this journey is the book Bonds, a Mindful Zen Guide to Understanding Stable Investing. And just to pique your interest even more, it compares bonds to planting a tree. Now that sounds way more interesting than I thought when I first heard about it. So to help us unpack this whole tree analogy a bit and why bonds are often considered like the calmer waters in the world of investing, let's bring in our expert. Happy to be here. So tell me more about this whole bond as a tree thing.
So when you buy a bond, you're essentially lending money. And just like planting a tree that takes resources, you're lending these resources by investing in a bond. This loan can be to the government, a corporation, even a municipality. And in return, they promise to pay you back the amount you lent, plus interest. That's your fruit from the tree.
Yeah.
On a set date called the maturity date.
Okay, I think I get that. It sounds like with bonds, you can have a pretty clear picture of what you're going to get back and when. We're not talking about those get-rich-quick schemes here. This is more about steady growth over time.
Exactly. And that's a key difference between bonds and, let's say, the stock market. With bonds, you generally know how much you'll get back and when. It's like planting a tree, tending to it, and knowing that with a little patience, you'll eventually be enjoying its shade and maybe even some fruit. It's a really great way to add some stability to your portfolio, especially if you're someone who's a little bit anxious about the ups and downs of the stock market.
Okay, yeah, that makes a lot of sense. And our source mentioned something really interesting about bonds. It's not just about the financial return with bonds. It's also about potentially supporting something bigger than yourself. Can you tell me a bit more about that?
Yeah, when you buy a bond, you could be providing the funds for a new school to be built, a bridge to be repaired, or even for a company to come up with a new technology.
So it's like choosing to plant your tree in a community garden rather than just your backyard. It still benefits you, but it also has this ripple effect, contributing to something larger than yourself.
Exactly. And for a lot of investors today, that's so important. They want their money to not only grow, but to also make a positive impact at the same time.
That totally makes sense. But let's get into the different types of bonds that are out there. It's probably not just one size fits all, right?
Yeah, so just like trees, bonds come in different varieties, and each one has its own characteristics, risks, and potential rewards.
Okay, so let's break down these bond types a bit. Let's start with government bonds. What makes these so special?
Well, imagine the sturdiest oak tree you've ever seen. That's what a U.S. Treasury bond is like in the world of investing. They're considered very low risk because they're backed by the U.S. government.
So, if I'm understanding this right, if someone's looking for a safe haven for their money, a way to protect it while also earning a little bit of interest, U.S. Treasury bonds could be something to consider.
Absolutely. They might not have the highest returns compared to other investments, but they're like that old, reliable oak weathering storms and standing strong.
I love that image. Okay, now what about corporate bonds? What's going on with those?
Think of corporate bonds like apple trees in an orchard. They have the potential to yield higher returns than government bonds. But with that comes a little more risk.
Because a company's success isn't as much of a sure thing as the U.S. government.
Yeah, exactly. Investing in corporate bonds requires doing a little more research. You need to assess the company's financial health, understand its track record, and try to get a sense of its future prospects.
So it's like being an arborist, but for your money. You need to know which trees are doing well and which ones might need a little extra TLC.
Yeah, exactly. Now, shifting gears a little bit, let's talk about municipal bonds. Our source refers to these as community gardens. I think that analogy really captures it well.
I love that. I've always liked community gardens. Tell me more.
Municipal bonds are issued by local governments or state agencies to fund those projects that benefit the community directly. Think new schools, libraries, road improvements, parks, that sort of thing.
Okay, so instead of investing in a company's growth, you're investing in the growth and well-being of your local community. That's really cool.
It is. And a really interesting thing about municipal bonds is that they often come with tax advantages. So you're not only potentially making a difference locally, you might also be getting a little bonus when it comes time to do your taxes.
Now, that's a win-win for sure. Okay, before we go too far down that road, let's talk about junk bonds.
Ah, yes. The infamous junk bonds.
They do sound kind of exciting. Our source uses the term high-yield bonds. But junk bonds just has a better ring to it.
It definitely grabs your attention. But when we get down to it, these bonds are a bit more complex. Think of them like those exotic fruits you might see at a farmer's market. The ones that look really tempting, but you're not quite sure about that first bite.
I know exactly what you mean. So what makes these exotic bonds potentially riskier than the others?
Well, junk bonds are usually issued by companies or entities that have lower credit ratings. This could be because they're newer, they're in a volatile industry, or maybe they've had some struggles with their finances in the past.
So there's a higher chance that those companies might not be able to repay their debts.
Yes, exactly. But here's the trade-off. Because they carry more risk, they often have the potential for higher returns. Higher risk, higher reward.
It's like that exotic fruit. It could be amazing or it could be a total miss.
Exactly. So how do these different bonds, from the really safe government bonds to the more adventurous junk bonds, all fit together into a balanced portfolio?
That's the big question, isn't it? And our source keeps talking about bonds being like the stones in a garden. They're the things that provide structure and stability even when things get a little crazy with your fast-growing plants or stocks.
That's such an important point. Building a bond portfolio isn't just about getting the highest returns. It's about creating a mix that works for you, for how much risk you're willing to take on, what your goals are, and how long you plan on investing. Just like how you wouldn't plant a garden with just one type of flower, you don't want to only have one type of bond in your portfolio.
You're talking about diversification, spreading out your risk to create a more resilient portfolio.
Yes, exactly.
But how do you actually go about doing that? There are so many options.
It definitely can feel overwhelming.
Mm.
And that's where it can be really helpful to work with a financial advisor. But even before you do that, it's so important to understand the basics of bond investing. It's important to know how different types of bonds react to what's happening in the market.
Which is why we're doing this deep dive, giving everyone out there listening the knowledge they need to confidently navigate this world. And speaking of navigating, our source also talks about how important patience is when it comes to investing in bonds. And I'll be honest, patience isn't really my strong suit.
I think a lot of people feel that way, especially these days. But you're right, patience is so important when it comes to bonds. They're definitely not a get-rich-quick scheme. It's more about slow, steady growth, just like that oak tree we were talking about before.
About trusting the process, right, and not panicking when things in the market get a little shaky. But speaking of shaky markets, we can't talk about investing without talking about risk. How do bonds, which seem like pretty safe investments, hold up when the market gets a bit unpredictable?
That's where bonds really shine. Remember our tree analogy. If a storm comes along those fast-growing plants, your stocks, those might get really beat up by the wind and the rain. But that oak tree, your bonds, they're more likely to make it through the storm.
So while stocks can be all over the place, going up and down with how everyone's feeling, that day bonds offer a little more stability. They're like the anchor that keeps your portfolio from getting completely wrecked when things get tough.
Exactly. And this actually relates to a concept that our source talks about, impermanence. It's a big idea in Zen philosophy, and it really applies to investing too. Markets, just like life, are always changing. There will always be good times and bad times.
So it's not about trying to control everything or act like you know what's going to happen next. It's more about accepting that you don't know what's going to happen and making sure you're prepared for anything.
Exactly. Bonds, because they're relatively stable and predictable, can help you stay calm when everything else is chaotic. They remind us that investing doesn't always have to feel like a roller coaster.
You know, thinking about everything we've talked about today, I'm realizing that investing in bonds isn't just about numbers and interest rates and things like that. It's really about changing your mindset about money and maybe even life in general.
I think you're exactly right. And this actually leads us to another really important point that our source makes, the importance of letting go of your expectations. Now, this might seem strange when it comes to finances because we're always setting goals and trying to achieve certain outcomes.
Which is what we're always told to do, right? We set goals, we make a plan to reach those goals, and then we hope it all works out the way we expect it to. So how does letting go fit in with all of that?
It's not that you should just give up on planning or having goals entirely. It's more about understanding that you can't control everything. And sometimes things happen that you just don't expect.
So it's about being willing to adapt and change your plans if you need to.
Exactly. It's about finding that balance between having a plan, but also being open to changing things if you need to. Being disciplined, but also adaptable.
For our listeners out there who are maybe feeling a bit overwhelmed with all the information out there about investing, this idea of just letting go of your expectations could actually be really powerful.
Hmm.
It's not about having all the answers or knowing exactly what's going to happen. It's about making smart decisions and being prepared to adjust those decisions as you go along.
I completely agree. And I think that's a really important thing to take away from this conversation. Bonds teach us about being patient, not making rash decisions, and looking at things from a long-term perspective. They're a good reminder that slow and steady wins the race.
We've covered so much today. We talked about all the different types of bonds, how they can be beneficial, and even how they relate to philosophy. So, as we wrap things up, what is the one thing that you want listeners to remember from today's conversation?
Understanding how bonds work can lead to financial well-being, but also peace of mind. That feeling of knowing that you've made good financial decisions for yourself and your future.
Well said. And for anyone listening who wants to learn more about bonds, there's no better time to start than right now. So, until next time, happy investing, and remember that sometimes the smartest decision you can make is the one that gives you peace of mind.